Yeah. So given where the sub-Saharan Africa economies are generally, private equity plays a much more important role than it would in a more mature, developed economy. And essentially, most of what we do and our sister firms do is growth capital. And you think about many of these businesses, great ideas, great people, but limited access to debt and debt capital and limited access to sort of public equities markets. So this essentially is a bridge between where they are now and where they could be. And it's actually sort of the private equity in its most beautiful and productive form. And I think it absolutely boosts the growth, not only of individual companies, but of sectors, and we hope of economies as a whole. In our own portfolio, take Seven Energy in Nigeria, which was really the first private gas pipeline company. And it involved, in the end, investment of about $500 million of equity, another roughly $1 billion of debt, which was only available because the equity was there. But has now built a really sophisticated, high-quality gas pipeline network, which is critical to the industrial use of gas. This is a perfect example. None of this would have happened unless equity investors had taken the risk to back the company in the first place. I don't know if there are other examples you'd like to have, but I mean, in Botswana, we funded Choppies, which is now the largest grocery retailer in sub-Saharan Africa, outside of South Africa, growing very rapidly, cash flow generative, but through our investment, they've actually been able to accelerate that growth quite a lot. Even though they're relatively mature, they have access to public market capital. The fact that we were there and invested quite a lot of money to help them accelerate growth means formal retail gets rolled out even faster. So the sectors generally are the themes that we've been backing in terms of attractive sectors have been anything which relates to an emerging middle class. So consumer goods, telecommunications, housing, financial services, things that people get as they move either to $1,000 of household income, $5,000 of household income. So that just gives rise to a whole bunch of attractive sectors. Other sectors that we like, infrastructure, so anything which is infrastructural support with cement, but we also like infrastructural services. So not necessarily individual projects, but as the old cliche of in a gold rush, the people who get richest are the ones selling the shovels, and there's a big element of that. So building infrastructure to make the rest of it go is attractive. And then the other sector that we really like is extraction. So things that are made or grown or pulled out of the ground here and sold elsewhere and beneficiated in the process. And as Africa has loads and loads of natural and sort of semi-processed resources, and the demand from the rest of the world is quite extraordinary. So I think those are three good recurring multi-sector themes. In terms of geographies, because we are affiliated with an Anglophone bank, and we were very Anglophone as a team. The big economies, West Africa, Nigeria, and Ghana in particular, East Africa, the East African community, Kenya, Uganda, Tanzania, and then in Southern Africa, Zambia, and people are always surprised at Zimbabwe. So we made actually 3 investments in Zimbabwe. Overall, those are the countries where we tend to look. There probably are great opportunities in French-speaking West Africa. There are probably great opportunities in Lusophone Africa that we haven't really accessed, and maybe we could over time. But these are the biggest economies, the most developed. They have the best rule of law, the best ecosystem of advisors and bankers, and we feel most comfortable investing. That's also where our networks are. It's where the bank is as a sourcing, as origination platform. So overall, I think those are the sectors and the countries that we're most comfortable with. It's also where we happen to be and spend our time.